Aloha, everyone. Another impressive day for the overall market. However, I have to be honest, this is ridiculous. We got very fearful, very oversold, and the big, huge volume surge off those on the 15th indicated to me that we had some fearful selling. I did not go in and buy inverse ETF long positions because there's just no way that we're just going to rally straight up in a V-shaped formation, right? Following the session on the 15th. We're going to need to back and fill that probably, and then I can get long. Whoops. That's all we're doing. Another V-shaped rally. However, this one is a little bit more crazy looking than the rest. If you go back out, take a look at this chart. Do you see anything like that throughout the 2012 downturn, 2013 downturn? At the start of the 2014 downturn down here, but then it slowly went back to old highs. And then what happened when it hit new highs? Came off of them. Then went to new highs again, and what happened? Came off of them. So even if you think that we can rally to new highs from here, we are more than likely, if we do it in this form of manner, with the volume that we're currently seeing on the rally attempt, we're going to fail. We will fail at new highs. We will hit new highs, sucker in more people, and then fail. Now, my mind is open. Following today, we do have an official follow-through day. Volume's higher than the day before on the NASDAQ. And if we look at the S&P 500, we can see the same thing. Volume is above average and higher than the day before. But still, does that look extremely convincing? Does it look like a convincing follow-through day that leaves nothing left to the imagination that, oh boy, we're really going to take off here? No, absolutely not. So I will once again remind you that in February, whenever we pulled back and started a rally here, I had a lot of big cap indexes, that stocks in those indexes that were giving me great signals from tight patterns. For instance, FDX, as it came off of its lows in April and February, look at how tight that pattern was. But the bottom line is that it took time for the market to hit highs and then continue higher, and it didn't do it in a nice shape formation. From February, it hit new highs, was kind of choppy, tried to sell it up again, and then started to rally to new highs, only where it didn't make it very far. Then it did it again, and once again, didn't make it very far before selling off. So we're not set up for a rally. If we're going to rally, we're going to need to back and fill the recent movement. We are not overbought on any of my short-term oscillators other than stochastics. Wilder's RSI is also getting up there. And the McClellan Oscillator Index is at very, very, very high levels in the index. So we'll pull back. So we'll move to the 50-day moving average here on the S&P 500. Sure. Russell 2000 moved to the 50-day moving average. Sure. NASDAQ, a move to the 50-day moving average? Absolutely. NDX, a move to the 50-day moving average? We're almost there? Absolutely. But what we do from here is going to probably take a little while to fight through. Then if we resolved ourselves higher, we're going to have more new long positions. If we resolve ourselves lower, I'll hit this market again because the noise on Twitter and Facebook and stock twits is unreal. The buy the fucking dip crowd is louder than I've ever heard them. The I told you so's are more extremely loud than I've ever heard of them. So there's a lot of cockiness and arrogance from the buy the effing dip crowd. So I'm really cautious here, despite being under a neutral signal with some few long signals. And that brings up another point. I don't have a whole lot of nice chart patterns out there. Facebook, while it's going to new highs, look at its pattern. Pretty V-shaped short term. Tesla, that's going to, take some work. And if you think that ILMN is just a move that you can buy off of this double bottom pattern, why didn't it close higher than where it opened? I would have figured if this Bible gap up was so strong, it would have held. And while I like that BIDA has retaken its 50-day moving average, the volume is very good here. It's still, this is just, as you can see, it's still deep within this cup base, and compare this cup base to anything it had before. So if it's going to break out and move higher, it's going to take more time to get symmetrical. We're nowhere near symmetrical. We don't price tightening up around the 50-200-day moving average in any charts, so it's going to take some time. If BIDA does break out and moves to all-time highs here without me, so be it. This is not a kind of market for somebody like me, who's an end-of-day trend follower. I do day trade. Today the day trading didn't go so well. I did a couple of day trades and they were small losses in live and small losses in ESI. Besides that, there really isn't a whole lot. I didn't day trade the indexes, and obviously I should have focused more on that, just like I was telling everybody else to do, but my focus was on stocks, so be it. But on the end of day trend following method, it's going to take time to back and fill. what we've just done before this tape looks right, like it did back here in May to June to July. To get this going again, we're going to need to back and fill. And we didn't have anything like that until February. February was the last V-shaped rally, and like I keep telling you, how did that turn out on the NASDAQ? Why would it be any different? So we need to see some backing and filling. Some house cleaning to do. BIS, that hit my sell stop intraday. I'm all out of it. SPXS, if you haven't gotten hit, that's a 50% sell. So is SQQQ, and so is SOXS. I'm out of SOXS, hit my final sell stop limit. SQQ, SPXS was hit intraday. And then look at this. If you want to know why I'm not convinced that this market's healthy, you give ENTA that gives multiple pocket pivot point signals, gives us a great low risk signal right where I want it. The price is coiled at the 50-200-day moving average, a long consolidation here on the weekly, and then boom, a breakout from this extremely bullish price pattern, long-term price pattern. This means that this stock is about ready to double, right? Based on this previous measured move from 14 to 41, and then based on the breakout now from this extremely long base from a tightening 50 and 200-day moving average. Wrong. Bigger volume reversal, back into the consolidation area, still above my final cut loss level, but WTF. This is a huge tell that you might not be dealing with a healthy market. On top of that, don't forget IBM, Coca-Cola, Netflix. If you were dealing with a market that was completely sold out, you don't have gap downs following earnings. Now, while it's great that Netflix is holding up, IBM not so much, and now we got to see what Coca-Cola does. McDonald's was also another one, but it did hold up, so far so well. But once again, we are not out of the woods yet. So I have two new long positions that I'm going to give to everyone. I'm also going to take a speculative long position in another stock. ERA, this right here is a 5% signal with max green bop because we're under a neutral condition. We're not under a buy condition because every index is still below the 50-day moving average. Or else, if this stock had max green bop with that price and volume surge today, look at that volume surge. Look at what it does to the previous volume bars. And look at that price bar, closing at the highs after opening at the lows. Beautiful, beautiful, beautiful. You get max green bop to that, today that's a 5% signal. Under a buy condition, this is a 10% signal. Sadly, today it's only a 2.5% signal. If this move is really going to go, we will get ad signals. This stock will base out and break out from a consolidation pattern here at the lows from this currently beautiful technical pattern that is trying to form off the lows. But for now, 2.5% for me, and I'm putting sell stops on the books in case it doesn't move up higher. I'm not messing around, especially watching ENTA. And then AMWD, I love this technical pattern, but I don't love that it didn't close higher than where it opened. So instead, I want it to prove it to me first. Buy stop will be set just above the recent highs, which is right around 38.92, so right around the 39 level. A breakout above that 38.95 level, and we will be long AMWD. Sell stops will then be immediately set with a move below the 50-day moving average as the first cut loss signal. Then you could use the 36.82 level, and then if you're really, 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 really brave, you can either use 35.46 as your final cut loss signal, or 35.32 as your final cut loss signal. But this would also be in a 2.5 position. If this stock closes higher than where it opens, it's along today at 2.5%, along with me setting a 2.5% buy stop on it. But it is what it is. So for now, gonna just take it easy here until we can pull back some of these recent gains, get some nicer chart patterns out there. Like I said, I'm void of nice chart patterns. The few that are out there, though, might as well go ahead and show them to you. ANGO is out there. IVP, they have earnings coming up, unfortunately. APOG is good. I like that. Too bad it's not close to the 50-day moving average. I don't want to take this signal today, especially with it not having a pocket pivot point signal. And then PDS, I really like this position. This here would be a 5%er with the volume surge, the price and volume surge, the max green bop under a buy condition. Under a neutral condition, still 2.5%. Why? Because look at the volume bars. Do you see them move like you did ERA? No, it's not the biggest volume that you can see in this chart. It had higher volume back here in April. So it's only 2.5%. Sadly, earnings are on the 24th. Not going to buy a stock 2 days ahead of earnings. So PDS is a pass. This being said, though, I do have one other long position. CTHR, very speculative. Gave a signal back here. Should have taken it. I did not. 250 is where I wanted this thing off this pocket pivot point signal. Why didn't I take it? Because our model was under a sell signal. It was just day one of a rally attempt, if I can remember correct. Nope, day two. But still, it was the first update for the NASDAQ and for the other indexes besides the Russell 2000. And BOP wasn't max green. If BOP would have gone max green on the day, we would have started initial position. But since that day, it has continued to consolidate sideways and appears that it wants to break out higher. So what I'm going to do is I'm going to go half market or half limit order, at 256, half limit order at 250 where I wanted it. Hopefully we can get filled on those, and then what will happen is that sell stops will be set immediately at 235. But as a speculative play, therefore it's only going to be 1% of my account capital, especially since I wanted it on the 16th and we're a few days removed and 2.40% higher. So hopefully the limit can hit. Hopefully we get 256. If the stock gaps up and runs, though, whoops, guess I should have bought it back here. But for now, neutral signal. We're not out of the woods yet. One final thing that I did want to show you. Hold on, I want to show you this. One final thing. And I don't know exactly where it's at. Okay. Whenever we get this crocodile pattern here, looks like a crocodile's about ready to eat you, especially here SP 5 and 30 yield, we normally refill it. Either high yield catches up, 30 yield catches up, or S&P catches down. But either way, we have a crocodile shaped pattern forming, and the previous times this year that this pattern is formed, the S&P 500 has come down to meet the 30-year yield. On top of that, look at the volume above average on the sell-off. And look at the volume above average on the rally. Once again, there is no real accumulation to yet another rally attempt. Something to keep in mind. Aloha.